Adobe stock is down 27% year to date in 2025. And does that make it a buying opportunity for 2026 and beyond? I'll answer that question in this video right now.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
To answer the question, I'll look at Adobe's revenue growth over the previous decade, its returns on invested capital, and then reveal my fair value calculation for Adobe. Starting with revenue going back a decade, Adobe has done an excellent job boosting its revenue from $5.9 billion in 2016 all the way up to $23 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 17%. In recent quarters, Adobe's growth rate has slowed down considerably, but still remains in the double digits. Investors are concerned how Adobe's business will be impacted by the rising effectiveness of artificial intelligence and the increasing competition it's presenting to Adobe. Adobe has long been a very lucrative business, and the switch from sales of the product into a recurring subscription model has boosted profitability and reduced piracy and stealing of Adobe's content. All that has been good, but the risks from AI have kept Adobe stock underperforming in 2025. I mentioned how lucrative this business has been, and it's been improving. Over the previous decade, Adobe's return on invested capital has improved from 14% to 26%. It's been so profitable, in fact, that I've been suggesting Adobe's management team should increase the allocation to research and development. That's to offset some of the risks of innovation coming from competition. Adobe has a great team of individuals that have demonstrated great innovation in its creative product segments. I'm reasonably confident that if Adobe were to increase investments in that category, it can come up with innovative products that can offset some of the potential disruptors that are coming up, including other services that aim to offer similar services to what Adobe offers, but for more accessible customers, meaning not as complex in use case and more accessible to folks that don't have the skills in this digital creativity segment that Adobe caters to right now. And so I'm thinking, and management has reiterated, they will be investing in these categories to boost developments and boost the product pipeline. Now let's get to valuation. I calculated a proprietary discounted cash flow for Adobe, and I found this business is worth $423 per share, and the current market price is only $324 per share. So even after applying a margin of safety, Adobe stock looks undervalued based on the current market prices. And the weighted average cost of capital, which is incorporated into my discounted cash flow valuation model, I calculated at 12.2%, and I used the capital asset pricing model, which uses the company's beta of 1.5, a risk-free rate of 4.1%, and a market risk premium of 6%. And these are relatively high numbers for calculating a valuation compared to the market risk premium. I have rated it higher than usual because I see an elevated systemic risk right now in the overall stock market because of elevated valuations overall, while there are companies specifically like Adobe that I don't feel are overvalued. The overall stock market, I feel, is slightly overvalued to mildly overvalued. And so when I feel the stock market is in this position, I increase my market risk premium. And during times when everyone is pessimistic on the market and the stock market is down considerably, that's when I lower my market risk premium, because for me, it seems contrarian. For me, it seems like a much better time to be investing when everyone else is pessimistic on the market. I find those to be great opportunities to make investments. Now, I shared with you the valuation using my proprietary DCF model. I also like to look at valuation on a forward price to earnings basis. And I go to fiscal.ai, which is my preferred data provider. That's where I've been getting all these charts. There's a link in the description if you're interested. Adobe on a forward PE basis is trading at 14.2, the cheapest it's been all year, and the cheapest it's been arguably going back almost a decade. There have been brief moments over the previous decade where you've been able to buy Adobe stock at a lower price, but those moments have been brief and those moments have not lasted very long. So, in my opinion, both looking at the forward PE and looking at my proprietary DCF, Adobe stock looks ridiculously undervalued. And so I will be recommending or rating Adobe stock as a buy for 2026. And I updated that recommendation today, December 1st. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.